What's up, everyone? It's Karthik with MoneyVest. Welcome on board for our market open live stream. Hope you all are doing great. There's a lot for us to discuss in this pre-market, as we are seeing the S&P 500 slightly down, QQQs also slightly lower at the moment. So we are seeing the markets basically flat to slightly down. Nvidia is up over 1%, trading up to $226. Tesla also slightly moving higher by over 40 basis points. And Broadcom is going to be reporting earnings tomorrow. It is already jumping 5.7% here as it gets a double boost from Google and Marvell. So two stories were moving markets on Tuesday. Google parent Alphabet unveiled a plan to issue $80 billion of equity. Nvidia CEO Jensen Huang said Marvell technology could top $1 trillion in valuation. And Broadcom stocks, of course, are even higher, surging as the AI boom drives up demand for chips. And the stock, of course, is now sitting well over $2 trillion, closer to $2.25 trillion now. And pre-market, it is jumping almost 6% ahead of the earnings tomorrow. Marvell up 16%. Valuation is now almost at $200 billion. There's still a 5x opportunity. Jensen Huang calling for almost $1 trillion in valuation for Marvell. And from its lows of $75, the stock has now gone up a whopping 230% here. Absolutely incredible. Few things I want to go over with everyone. So again, I'll just let more and more people join us first, and then I'll go over a few things. Number one, I made this video today, so this is available for all members to watch. Shopping list performance update. So this is a very detailed 16-minute video going over all the stocks in the shopping list and their performance, our accuracy, our hit rate, where the buy targets were, what levels actually got triggered, what signals got triggered, whether it was a buying opportunity or not a buying opportunity, and what the outcome was for the shopping list. So the reason I do these kind of videos is to really just check my own work, go over and analyze my own analysis on stocks and what companies we actually decided to put in the shopping list and what their performance ended up looking like, and also where the prices ended up trading. Did they actually come down to those levels that we were talking about in the shopping list, or are these just fantasy levels, right? And of the 40 stocks, 33 of them actually got triggered with some kind of buy target getting hit, whether it was a light buy, a heavy buy, or a fair value something, or all three or two of them. At least one price point got hit, and what the performance was after those levels got hit. And I'm happy to share all stocks, 100% of them were higher in this list. So in other words, they were all gainers, with the pricing, of course, varying, or the gain percentages varying. Some jumped 3%, 4%, some were up 200%, like AMD, Cadence Design Systems, a few other ones, but very, very good community list that we have put together. And this video I did earlier today. So again, 16-minute going over the entire analysis of the March shopping list and the performance update. The new shopping list comes out this weekend, so we are going to be paying very close attention to what stocks we're going to be adding, removing. Most of them are going to be the same. They're just going to get an updated fair value. Some of them we're going to add, and there might be a few that we might end up removing. So that's an important video. Definitely check that out. If you're a member, you have access to this. Even for free members, it is available to watch, just to give you a little bit of an idea on what to expect. I also did the options portfolio update. So 7 hours ago, I published the 2026 options portfolio update so far, going over all of my plans, all of my positions, with each position breaking down what my plan is in this options portfolio. So check it out if you want a little bit of an insight on what I'm doing, what positions I have, what my P&L looks like. The equity side of the position, equity side of the portfolio, sitting just shy of $500,000. And then, of course, I've got ETFs, and then I've got about $70,000 in options premiums that I'm going to collect between now and until the end of this year. So I do have about 7 positions that are expiring by the end of this year, or maybe 8. I think 9, close to 9. I think there's 2 that are expiring in 2027, but 9 of the 11 positions are expiring at the end of this year. So the options portfolio is going to clean up a lot by the end of this year. And if all those 9 positions expire whether in the money, out of the money, doesn't really matter. But once they do expire, I'm on track to collecting around $70,000 in premiums for all those options, right? So between now and then, that's the entire update. Also, my plans on what I'm planning to do moving forward as well. So all of that is covered in this video. So again, shared a few different updates, very important ones, the shopping list performance update, as well as the 2026 options portfolio update with all the current positions, open P&Ls, cost basis, plans moving forward. This was published by me back in May 12th, so a little bit earlier. If you haven't downloaded this already, this is also available, the Next Decade Opportunities PDF document that you can simply download and take a look at these 6 sectors, 6 themes that I'm really focused on for the next 10 years, where I believe the next big opportunities are. And then finally coming over to, of course, the SpaceX IPO. This is part 1 of a 2-part series. So check out this video as well. It's also another 25-minute, almost half an hour, going over the qualitative analysis more, going over the market and the moat for SpaceX and what that looks like. I know the valuation is going to be coming in at an insane level, $1.752 trillion. We got pretty much entire Wall Street is going to be working on this over the next 7-8 days to essentially have that delivery of SpaceX stocks. But this is primarily going over to the qualitative analysis of how big the market is for SpaceX, right? What does that look like? Because as per their own S1, they foresee the market at over $28 trillion, right? And massive. And they also mentioned that they have essentially figured out the largest market, in human history at 28 trillion. So that's the big sort of debatable question here, is how big the market really is for SpaceX in terms of what they're really doing. And then we kind of work backwards, and most of that is coming from enterprise applications using AI. And I feel like there's a little bit of an overlapping market for SpaceX for many other players as well. But the biggest advantage that SpaceX has is the cost advantage and the overall process advantage, because they can launch, build, cool everything under one roof for the data centers that they are planning to build in low Earth orbits. So very, very cool concept, of course. And again, SpaceX is kind of broken down into 3 different businesses. Space is the smallest one, which is kind of ironic because it's actually named SpaceX. But space in general is the smallest market opportunity for the company. Connectivity, Starlink is the biggest one. Well, I guess the second biggest one, but also the one that is actually generating the most amount of revenue and operating income right now. And the third is the XAI, right? The reason why they actually merged with XAI and wanted to buy it is because of its data, because of its capabilities, and that's where the crossover also happens. Where now at this point, SpaceX and Tesla, XAI, they're all kind of morphed into this one company. And Dan has also mentioned, long back, that it would not surprise him if SpaceX and Tesla were to merge in the future as well, because SpaceX is already going to be using Tesla Megapacks to bring their costs down as well. So yeah, so lots to discuss. I mean, lots to break down, because this is huge, right? This is the biggest IPO ever in the history of public markets. So I'm sure it's going to be front and center on all investor financial media, news, whatnot. So again, wanted to go over the part 1. Part 2 is going to be more important, I feel, because it is going to go over the financials and the fundamentals of the company as well, which are going to be quite interesting for us to look at, because, as value investors, as investors who look at fundamentals a lot more than momentum or technicals, I think that's where a lot of our discussion is going to revolve around, because with any Elon Musk companies, it's very difficult to evaluate where the fair value is. I think it's going to be just another Tesla 2.0, where valuation is going to be hotly debated. It's going to be a big, big question among investors, like, where's the true valuation for SpaceX, And so that's what we're going to discuss in our next part 2 video. Is option premium is good to go for a beginner? So I think options are one of the best strategies. When you are selling options, you're able to generate a lot of premium. And I think it's one of the best strategies for beginners, intermediates, even advanced traders. In fact, believe it or not, Wall Street, their main game is selling options, right? They're not like retail traders buying a $50 call. Like, they're actually the ones selling millions of contracts to generate a lot of premium, to continue to harvest as much premiums as they can. And it's really the retail investors get suckered into buying a $100 call or $100 put It's kind of like a lottery ticket that you're basically buying. If the stock pumps, great. If it doesn't, then you lose your premium. It's a small bet for an asymmetric reward, but the consistency and the probability of success is significantly lower versus if you are selling options, which in my opinion is a higher probability, higher success strategy, and also generates a lot of consistent income as opposed to like just buying a $100 call or whatever. So yes, to long answer short, I think selling options can be great as long as you know what you're doing and you are trading the right stock. And that's why we've got the shopping list. That's why we've got our whole community, because we are looking at high quality companies at all times, companies with good revenues, good profitability, good long-term potential, because that gives us a nice confidence, conviction in the stocks that we're trading. Okay, lots for us to discuss. A lot of it that I already went over. SpaceX to the moon. Karab says, again, just got to be very careful with valuation. We will talk about that, in part 2 of the SpaceX video. But please do check out the part 1. I think it's going to be very interesting. It's going to go over the moat and the market itself and what SpaceX has to offer. So it's a bit of a qualitative analysis video, but definitely do check that out. Share this with other investors and traders as well, because it's, like I said, the biggest IPO in the history of public markets. So if you are just as passionate as I am about the market, this is super exciting stuff. I think it's going to be more of a case study for us as well. I'm not interested in what SpaceX does on June 12th. I'm interested in what SpaceX does on December 12th. That to me is way more important than what it does on June 12th. June 12th is just the IPO. What it does 7 months after the stock has already gone public is way more important, because the public market is going to get a feel for this valuation. Revenue-wise, we already know it's nowhere near close to 2 trillion valuation, right? If we were looking at a 10 times sales, the revenue should be 200 billion. If you were looking at 20 times sales, the revenue should be at 100 billion. If you were looking at, let's say, 40 times sales, the revenue should at least be 50 billion. But no. We're not even anywhere near close to 30 billion revenue. We're closer to 20 billion in revenue. So we'll talk about that, and you'll see me go crazy in part 2. So when we talk about the valuation, where they're launching. And one of the best quotes I heard today, or when I was reading and I was doing my research, is that IPOs initially, back in the day when there was an era of actual IPOs, used to be the opportunity for companies to give retail investors like you and I the opportunity to get in on the ground floor. Right? If we wanted to invest in a company, the company would go public, and we get the opportunity to invest on the ground floor, and then it continues to appreciate as it's executing well. Now it's completely flipped. The companies are choosing to stay private for longer because private investors go crazy, and they know the public investors are going to suck it up and they're going to buy every share they can. So they inflate the valuation in private markets to a point where it just becomes ridiculous, and then they decide to go public right towards the end of that euphoric phase, and then absolutely a massive dump comes in on retail investors, right? So public investors absolutely get shafted once the stock goes public. And that's why our job as retail investors who necessarily don't have access like to the private markets, as some of the biggest VCs do, our job is to evaluate the valuation and see what makes sense and call BS for BS, right? I'm not saying SpaceX is a terrible company. In fact, I love it. It's a great business. It's a fantastic IPO. Valuation is what matters, right? Because even if you give me the best asset at the wrong price, it's still a wrong price, right? It doesn't matter the quality of the asset. On the contrary, though, if you give me a very shitty asset but a very good price, excellent price point, I might consider it. I might actually consider it. And that's where the Peter Lynch, and more specifically Howard Marks analysis comes in, is that he's the king of distressed deals, right? Howard Marks is the king of buying distressed assets. Why? Because he understands the value that he's getting and the price that he's paying. So even if he's buying really bad assets, he's buying them at even better prices to justify making money on them. Whereas Warren Buffett's got a different approach. He's buying great assets at an even better price, but price is standardized, right? Doesn't matter if you're buying great assets or bad assets. Price is what really determines your success. So that is something that we have to always remember, right? Price paid determines your future returns. And you can have two very different approaches, Howard Marks or Warren Buffett, but the bottom line, the denominator is the same. It's the price that you pay for that asset. So that's what we have to analyze in part 2 very carefully. We'll take a look at it in terms of valuation, and We'll see where we end up. I hope it's not super disgustingly disrespectful valuation for SpaceX, but I'll try my best. We'll try to envision what the growth looks like and what the P multiple and price of sales might look like 3 years, 5 years on the road. And I'll try my best to at least try to get it up to as much as the valuation's coming up on the IPO day. All right, so would you hold VGT as an ETF, your core Bitcoin as your growth, and gold as your safety portfolio, or too risky or too slow for long term? Okay, so good question. Those are three very different asset classes, right? So you've got Bitcoin that is extremely volatile. You've got gold that is also very volatile. I wouldn't necessarily consider that as a safety trade. And then VGT is good if you are looking at long-term tech exposure, but it can also be very, very volatile as well. So yes, VGT has done incredibly well since March 30th. It has gone up over 50%. But all three are very different and very risky at the same time. Depends on what your allocation is and where your conviction is. So when I did the performance update, when I did this video, actually you might be able to see the comments here. So somebody was asking, one of our members was asking me, the question around where, so this right here, what would you consider as the fair allocation for each category of buy, right? So I mentioned that depends largely on your level of conviction. So allocation is a direct result of your conviction. I think that's really important for all investors to remember. You would not buy something that you're not confident in, right? You would not allocate capital into something that you don't believe in, right? Pretty straightforward. So your level of allocation, regardless of whether it's a stock or it's a Bitcoin or it's gold or silver or it's real estate, whatever your allocation is, it is a direct result of your conviction in the said asset. So I would ask myself, like, how confident am I in Bitcoin? How confident am I in gold? Like, what's my conviction? And even if you are incredibly confident long term, we have to also combine it with the level of certainty and also the probability of drawdown. Because on paper, something might feel like, okay, it's high conviction bet, but in reality, it might be a high conviction bet, but with a lot of volatility and drawdowns. So if that is something that you don't expect or price in, then you are just looking for trouble. And so the way I structure my positions is, okay, I analyze a stock, I build a thesis around it. If my conviction's high and I believe there's going to be normal fluctuations that like any other stock has, the probability for drawdown is there, but I'm accepting and expecting that, then that's an allocation I would give it. 10%, 20%, depending on my level of conviction. So same for you. If VGT, if tech sector is what you believe in long term, it's like, okay, this is the growth sector that I want to be in. And then depending on where you are with Bitcoin and gold, I would allocate appropriately. For me, gold is about 5%, crypto also 5%. So both of those are going to be under 10% allocation of the portfolio. I believe in them. They're good. But for me, I think a stronger growth opportunity will always be stocks and then real estate. So stocks and real estate would be two of the bigger core positions in the portfolio. And then it comes down to Bitcoin and commodities, because not that they're not great assets, they're great, but they're also dealing with a lot of volatility. They're also dealing with a lot of drawdowns. Coming over to crypto, for example, not having the best day. Bitcoin is now down under 70,000 and BITX has really made my life pretty difficult. I mentioned in the options portfolio as well, down over 44% now, Bitcoin. So yeah, I mean, it is volatile. It's going to deal with a lot of drawdowns. So we have to analyze that ourselves. So you only sell CSPs at support and covered calls at resistance. What do you do in between? Fanny's asking. So you don't really need to do anything in between. Like what? So basically you're holding onto a stock, right? So if I buy and sell a CSP, for example, VGT here, and I sell a CSP right there and I get my shares assigned, I collect the premium and I have the shares, and then it absolutely rips, and then I can sell my covered call here, right? And then I'm able to capitalize on all this entire gain, right? So I'm sitting on a profit, and then I'm also selling a covered call at resistance to collect more premium. So I don't really need to do anything in between, right? Oftentimes people end up making too many decisions. They think that I need to be doing something at all times. That's not true. You actually need to make fewer decisions for a better investing success. Fewer decisions are always better than more decisions when it comes to trading and investing, because at the end of the day, like, the market should be doing the heavy lifting for you, not you. So And that's what I've noticed in my own experience as well. The less decisions I make, the more money I end up making, because I'm not trading against myself. Because the more decisions I make, the quality of my decisions goes down. I start to have more fatigue and I end up making the wrong decisions. So let the markets do the heavy lifting for you. Once you've established a position and it's a high quality stock that you believe in, let it run. Sell a covered call only when you feel like things are overbought, things are getting a little bit heated, we're getting up to a resistance, and then I can actually hedge my positions if there is a bit of a dip or a correction. That's it. Keeping it super, super simple. Okay, pre-market looking, 57% green on my portfolio. That is great. Really looking at ZS today, probably going to add. So let's take a look at Zscaler. So I'm still working on a Zscaler video, Temoff. I know you mentioned and requested it. Been busy with Broadcom earnings and of course the SpaceX IPO. But we'll take a look at ZS as well. It's part of the shopping. It's actually one of the fewer names that hasn't really moved. CrowdStrike, Palo Alto, Fortinet. The other three have really just left Zscaler alone right now because all of them are trading at all-time highs. Look at Fortinet, look at Palo Alto, look at CrowdStrike. They're all just been ripping. And Zscaler is like probably the kid left alone in the playground nobody wants to play with. So, but that being said, I think Zscaler had a bit of an overreaction and it's been selling off aggressively due to valuation concerns as well. But support level is going to stay put at 115. It's still part of the shopping list, most likely going to stay in there. And long term, I have no doubt Zscaler is going to be absolutely fine long term. So what's my plan with BITX? Oh man, I don't know. It's an asymmetric bet for me, as I mentioned in the Discord as well, or in the Patreon video. I bought like 1,000 shares, and I have that's 1,000 shares, and I do have 10 covered calls against them. They're up. They've lowered my cost basis a little bit, not a whole lot. But what am I planning on doing with this? I mean, Bitcoin's really having a tough year. Bitcoin's not having a great year, to be honest. 2026, it is actually down on the year, I think 20+%. So anything crypto related, support, resistance, a lot of speculation. And with that regard, I think BITX also has been a bit of a painful position to have. Same with BMNR. Same with a lot of crypto related stocks that have just not been doing anything. So plan right now is just to hold, not doing much, not adding here, not selling either, just holding, and we'll continue to sell covered calls when I can to lower my cost basis, collect a little bit more premium, and then see where Bitcoin goes. Okay, a lot of discussion on APH yesterday in the private group yesterday. Just search on APH here. Let's take a look at, so this one, I know, somebody mentioned in the live stream as well. A lot of consolidation sideways, resistance all the way up to as much as 155 with a support level of 118 for APH here. $180 billion market cap, revenue sitting at $23 billion. So that is good. We're not sitting anywhere near highs of 20, 30 times sales. It's only at 17, 18 times sales right now. So 148 resistance all the way up to 155. Got a very strong support on a 118 for APH at the moment. Okay, let's see. Is it a good time to buy energy stocks like CEG, VST? Any thoughts on SE, considering buying more at this price here? So let's take a look. C Limited here, resistance all the way up to $102. You got a very strong support at $76, $77. C Limited, in my opinion, is looking pretty attractive for sure. I think it came down to a pretty strong support, and we're seeing some bounce back higher. Resistance is going to stay put roughly at $102, $103 with a very strong support, like I said, at $76, $77 here. Energy stocks I've already covered. I think CEG, VST, these are companies that we have talked about on the channel before during our live streams. And it's also part of the investor memo as well, for long-term companies that are in the energy, power grid, infrastructure space. Support level for CEG is going to stay up at 260, down to 213 at 214. It's right now making a little bit of a head and shoulders here. So if you do start to break down further, 213, 214 is going to be that next level, and a resistance all the way up to as much as 329, 330 for CEG. I'm up 1100% on Micron. I keep selling one share at every $100 price increase to book profits. Would you suggest fully exiting the position at these prices or let the remaining shares run? I mean, the thing is that Micron has gotten ahead of itself for sure, technically. But fundamentally, it's a bit of a discussion, because the high bandwidth memory market has seen an explosion, right? And on that note, the revenues and earnings are expected to explode here. They have been exploding quarter over quarter. Look at those margins. Micron is just milking money right now, 60%. Whereas 4 quarters ago, they were at 20% margins. They've more than tripled the margins. Revenues have gone from $9 billion to $23 billion. So this trend is most likely going to continue. Is it priced in? I would say it is, for the most part, priced in. Technically, the stock scares me because the RSI is over 90 on a monthly time frame. So long answer short, I mean, depends on where your level of conviction and time horizon is. But if you can take your initial capital out, since you're up over a ridiculous 11 times, 1100%, if you can take your original capital out, then you're just playing with house money, right? Then you can just okay, this is the profit that I have in Micron, and you can look at selling cover calls to hedge some of that downside, because even if there is any kind of correction, which inevitably there will be one, at least you're protected with that hedged call, and you can still keep control of your shares, and you're keeping your upside for the long term. So that is how I would play a stock that I still believe in long term, but I also want to book some profits along the way. And I also want to keep my upside uncapped while also collecting some income. So really, the combination of long stock, short option strategy kind of gives you the best of both worlds. As long as you can manage expectations, timing, and prices, those are the things that you really need to manage. And, when you're selling options, oftentimes I hear people complain, and it's like a first world problem. It's so funny. People complain about making less money. People complain about making less profit. So they're like, oh man, I sold a covered call for NVIDIA at 200. It's now sitting at 224. I missed out on the profit of $24 per share. Like, yes, you did. But you also are making money. You're also making money on the fact that NVIDIA is going up and the premiums you're collecting. So that's a good problem to have, right? The worst problem is, I invested in the wrong stock and lost all money, right? So that's the biggest risk. But we are complaining about good problems to have. That's always a good sign that you are doing well, because most options traders, most traders in general, end up losing money in the market anyway. So the fact that you are making money, that's always a good sign. So that's what option selling is. I've always mentioned this, and I've talked about this in the course as well. When you're selling options, the probability of you making money is always high. It's just you might make more, you might make less, but the probability that you make money is quite high when you are selling options. So, okay, let's take a look at HIMS. A lot of people talking about HIMS and HERS. It's only up 1.5%. Again, my technicals do suggest more upside, potentially getting up to $32, $33. So that is a level to keep in mind. So we got a nice higher high and higher low pattern for HIMS and HERS. So this is, again, the uptrend. Support level is going to stay up at $21, $22 with a resistance all the way up to $31, $32 for HIMS and HERS there. Okay, thanks Karthik. So you seem to sell CSPs and really want to be assigned versus selling 20 delta at support instead. So yes, when you're selling a CSP, the goal really is to potentially get assigned. As option sellers, yes, we make good premiums when the option expires out of the money, worthless. But I always recommend that you sell an option on a stock that you want to own. Okay? We're not getting tempted by the possibility of selling a CSP on a stock that might pay us a higher premium, but is a really low quality stock versus a good quality stock that I want to own, even if that means I'm collecting a little bit less premium. So I would pick that any day of the week over a stock that I don't believe in. I feel like it's a low quality stock, but I'm selling the CSP just for the premium. Okay. So yeah, so that is where I would focus on is looking at high quality stocks that I want to own for the long term, selling CSPs on that. $50 strike for HIMS. Yep, so that's the one that I also have. I have a $50 strike on HIMS December. So it's going to most likely, in my opinion, expire out of the money. So I'll keep that. What about Nokia? Hood will benefit from SpaceX, etc. IPOs. I mean, there's going to be more trading activity on the platform if that's what you're asking. But unless there's a direct link between Robinhood and SpaceX that I'm not aware of, The only other link I see is that yes, there'll be more direct trading activity. There'll be more volume. There'll be like a short spike in volume. I mean, IPOs are always good for any brokerage firm, right? The more IPOs happen, it's good for banks. It's good for brokerage firms. It's good for liquidity. It's good for trading companies. That's always a good thing because there's an additional stock. There's an additional company on the platform that people can trade. Now, the question more is about net liquidity, not so much that, okay, we're seeing 100 IPOs this year. That's not inherently going to be good for brokerage companies or banks. Banks, yes, they're gonna make their fees regardless of what happens, right? They're always going to make money. Wall Street knows how to underwrite for enormous fees, and that's what they're gonna do. But when it comes to companies like Robinhood, Webull, Fidelity, like brokerage firms, Interactive Brokers, it's about net liquidity. How much net liquidity is being added into the platform when a new IPO comes in. So there's also this big debate right now that SpaceX IPO is going to suck liquidity out of other parts of the market and investors are going to flock towards SpaceX. I think that would be one of the biggest mistakes that people can make. If you're selling out your winners, if you're selling out, let's say, Semi or SAS, whatever other stocks that you believe in long term, and you're like, you know what, I just want to take profits because I feel like SpaceX is big, I think that can be disastrous. In my opinion, it is not a this or that debate. It's this and that. SpaceX is a new product offering. It's a new business altogether. And there's no competitors. There's no company that is actually doing what SpaceX is doing. Not on the Starlink side, maybe on the XAI side, but definitely not on the space side. Right? So on those metrics, it doesn't become that question that, oh, I need to invest in SpaceX by selling my other stock, because that doesn't create any liquidity for brokerage firms. If you're adding new capital, that creates liquidity, that creates more trading activity, more trading volume, and then it becomes better for brokerage firms like Robinhood. So you guys are asking about Nokia, BlackBerry. Let's take a look. I know a lot of these companies have just been ripping. So Nokia, let's see. There we go. Trading up to 1654 has just been crazy. It's more than doubled since April 2nd. So yes, been doing really well. But again, on a weekly, monthly time frame, I'd just be a bit more careful. Very similar to Micron. Technically, it does scare me a bit. Fundamentally, it might be improving quite a bit, yes. But technically, it is quite scary to look at these companies right now, given how much they've pushed higher and how overbought they are. So anyway, markets are open, everyone. QQQs and SPY are about as flat as it gets. Nvidia is slightly up 76 basis points. Tesla is up over 70 basis points as well. So seeing a lot of momentum to the upside. Thank you so much for joining. I really appreciate it. And again, link's going to be down below if you're interested in joining us. Again, please make sure that you do check out the videos. So again, going over the performance of the shopping list, options portfolio update, as well as the investor memo, next decade opportunities, PDF that you can download. And definitely do check out the SpaceX Part 1 video as well, posted about an hour ago. Part 2 is going to be coming out later this week. So thank you so much for joining. As always, happy investing. I'll see you all in the next live stream. Take care.